Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 125 for May 5th, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So over the last few days, about 40 people submitted up to 5 symbols each. Put the list together, and we're going to, of the top requests, and we're going to get through as many of those as we can today. So we are recording this live at 4 p.m. Eastern Time. And today I have arranged for Jim, the option professor, to be back to moderate, as well as Adrian Manz of Trader Insight to be here as a first-time guest. So we're happy to have him here, and he is sharing his screen. So you'll get to see his charts today and see how he looks at the markets. So I'm going to go ahead and turn it over to Jim now.
Okay, thanks, David. And everybody, great to have you with us. A big day today, really high up in the morning, and then closed down a little bit on the weaker side with the S&P. So we'll have to see what tomorrow brings as we get ready for the payrolls report on Friday, which I think people are going to be very interested in finding out how these numbers crunch out, at least for the first quarter, and then we'll see what quarter two brings. Adrian of TraderInsight.com is with us right now, and obviously some of you are not familiar with Adrian, so I'm going to let Adrian give a little background on himself to get started, and also a little bit about what's cooking down at TraderInsight.com.
All right. Nice to be here. Thank you. So Julie and I, my wife Julie and I, have been a professional trading team actually since 1996, 1997, I guess we started in grad school. So, those of you who do know us, you know the story. Those of you who don't, it's, we were both working on our PhDs, finishing our PhDs, and needed data to crunch. And really the stock market data was the thing that fascinated us. And, by the time I got done in grad school, I had Peter Drucker was a mentor and a committee member. And, he convinced us to keep going with this thing that we love doing, which was trading intraday. Essentially said, you've got a business that's profitable. Why would you go work for somebody else? And we agreed, and we've been doing this for a living ever since. Started Trader Insight in 1999, I think, and that was us trying to figure out a way to do something other than just push money around all day and get out there and do some public speaking and get in front of people and publish and do all the things that we thought we were going to be doing when we started as grad students. So it's been interesting. We do this lockdown has been very different for us because we do probably upward of 40 or 50 appearances a year at big conventions and shows and exchange events and things. And this has been weird. We've had all sorts of stuff canceled and kind of hunkered down like a POW here. Mm-hmm.
And the places that used to have the conventions, they're not really talking about coming back online really soon, are they?
No, I mean the stuff in Europe's all been canceled indefinitely. The things in the States here, it looks like August is pretty much the first time anybody's talking about doing anything again.
Right.
So it's going to be quiet for a while. I think.
Be interesting to see all those investors in the crowd keeping 6 feet away from each other. Huh?
Right. Exactly.
Well, of course, at the end of the broadcast, you're going to let people know how to get a hold of you, maybe some of the things you're currently offering out. But right now, let's jump into the list here, and we'll go through about half of it, and then we're going to give you a little opportunity to go through some specific situations that you're looking at. But let's start with Shopify, which is closing today. It looks like about 684 and change. This is a company that had a very big day today, and looks like it just made new highs and everything. What are you thinking here on Shopify?
Well, I mean, I think that, obviously I call that sort of a line drive setup, where you get that gap and go kind of a thing above current resistance. It's for us in terms of a daily trader, it's a little pricey and the spreads are a little bit wide for the kind of trading that we do, right? So we're going in first thing in the morning and trading the open and trading the first hour. But I think we're going to keep it on screen for tomorrow, since it's the reporting and everything. It's got a good chance of maybe gapping higher. If it gaps higher, then we're going to watch it to see, is that gap 2 standard deviations of volatility, of essentially 2 standard deviations of front month volatility. Where does that project it would go? And if it makes a big move in the morning, we'll fade it. We'll fade it back down toward the mean. And other than that, it's a little, if you look at the intraday on this one, it tends to have pretty wide swings even compared to some of the other stuff that we trade. So we trade a lot of Tesla and, Apple and Baba and that stuff. And Shopify can really sort of get away from you kind of quick.
Yeah, I noticed the 200-day moving average around 396. So you're getting to be almost 100%, not 100%, but 70% or better, higher than the 200-day. And you
Right.
were talking about standard deviations. The thing came off the 704 number pretty good today. If it can't do much past 704, would that be something that you could think might be a setup for a sell?
Yeah, I mean, we look for, so we'll look at it in terms of intraday patterns. So if we get up to, where we had this fall off today,
Right.
if we can get back up into that range, I don't know what tomorrow's pivots are going to look like. Probably pretty much this 686 level is probably going to wind up being the central pivot tomorrow. But if we get up into here and we see a resistance forming again there, and then maybe even get these bars that are leaving tails to the upside, then we would look at a short. I'd like to see it sort of later in the morning, maybe an hour into the trading day or an hour and a half into the trading day, just so we don't get caught in this kind of volatility, right? Where we get these, you're getting a 14-point swing on the open. That's a little rough.
Yeah, even on the Amazon, when it was up in the 2460 area, wherever it was, and I'm noticing the 200 days in the 180s, the air is starting to get a little bit thin, no matter how good the company is at some point, right?
Right. And we do a lot of tape reading, right? So we're watching a lot of, I'm watching volume by price quite a bit, and I'm watching the actual exchange prints coming off to see, are we getting this kind of a thing where we see a bump out on the volume by price indication as it's making a high, that it's not chewing through it. So there's a lot of things that we can look at over the course of the day to, sort of see if it's coming back in. But I definitely think that level is going to be, it's going to be a good spot to look to short it.
As far as volume is concerned, I've noticed on the 50-day average, it's much higher than the 200-day average. And then today's volume was pushing up towards the 5 million shares, which is even higher than the 50-day average. Is it possible that it could be kind of blowing off a little bit, and while it's still a great company, it could have a lower volume pullback?
I think so. I think, last one in, first one out kind of a thing is usually the impetus for the reversal in the morning. So, if it pops up on our scanner, then we're always keying on is what's the volume looking like as it's making the last of the new highs, and how many people are heading in the other direction as soon as it starts to reverse, because it can be, especially at these levels, this could be like a game of musical chairs in the morning. You just don't want to be the last one standing, right?
Right.
Yeah.
Well, the next one up is Zoom, which we all know because of shelter in place. Really saw their user base just go through the roof. Wasn't it like 10 million to 300 million or something crazy like that? And
Right.
of course, it ran up to 180. And then, of course, now we hear Google and Facebook and others, Microsoft, are coming out with their own free services to do this type of thing. So the room got a little crowded, more crowded. And what are you thinking about this thing up here?
Well, so it's actually on our list as a potential short side candidate, which is kind of counter to intuition, because, this is sort of the time that these guys are shining, right? It's been a favorite for the last few weeks at least, but coming down under, sort of this resistance here, where we see all this volume by price on the daily chart, and then, this looks like it's much a fib ratio, right? This peak to trough here. If it gets up into this 150.97 area, I'd really be looking for a reversal back down into this range. As an intraday trade, just to catch the move back down to today's lows would be fantastic. And even if it gets up into 150.97 and then starts tracking back down into this 146.87 number, I mean, we're trading enough shares that we're really not looking for a giant swing. We just need 40, 50 cents for a trade to make sense for us. But on the short side of the market is where I would see opportunity here. And on the long side, I just think it's probably going to struggle moving higher.
Yeah, I see the 200-day moving average is around 90 or so. So again, that would be one that's getting pretty extended standard deviation wise as well, right?
Right.
This next one is very amusing to me because it's a spinoff from the Raytheon United Technologies merger.
Yeah, Carrier.
And the thing that I found amusing is that most of their revenue comes from repairing their elevators. So it's a very good business. First, they give you a new elevator, and then they know it's going to break down.
Yeah, and they carry. I mean, they carry quite a bit of debt, right? So it's a. I hate to sound like the perennial bear here or something, but there's another one that the short side of the market really looks like if you look at these bars, if you look at the daily bars, even you can just see the ease of motion getting back down into the range after it goes and makes a push higher. So we don't trade this one a bunch because of the price point. It's 1650, so it's harder to get. It's harder to get a wide move out of this sort of later in the morning, but we'll definitely watch it around inflection points and around the bigger period MAs.
Yeah, Carrier was the other one they spun off, and they both had good runs after they got spun off. But
oh, you're talking about Otis. Sorry, I pulled up Carrier.
Yeah, Otis.
Yep, sorry.
Do you feel more that it's a valuation problem now than anything else? In other words, because they're not showing any yield or any PE on it right now.
Yeah, it's I think when these things sort of fall out of favor with the investment crowd, they become difficult as intraday traders. So there it is. So this one, sorry, that's went to Carrier on when you said spinoff, and I thought Carrier immediately.
Yeah, well, exactly.
Yeah, it's for me, it's the inability to get convincingly through these prior highs, and then when it did make what made this move higher, they just started selling this thing like crazy. So I think here this and Carrier, Carrier, the story if you're following it in on the news wires or Reuters or Barron's or any of these things, all they talk about is the debt ratio, and it just seems like for both of these things, the overhead is just there's a lot of people willing to take a profit on this right now at the first sign of trouble. So I think intraday, right, for us, if we're looking at this thing now, this doesn't pop up on our radar very often at all, but if I was looking at this, then definitely seeing a consolidation first thing in the morning and this sort of like kings and queens reversal up here, first thing I'd be looking for is is there a place that it's likely to break down from the consolidation, and do I have a solid target down below? And in this case, I mean, we use a lot of the floor trader pivots and fib zones and all that kind of stuff in our trading. But when we get this kind of confluence, where there's a prior real heavy support there, then this to us would have made I wish I would have seen this today. That's an attractive trade on the short side.
Is there a certain sector that you tend to gravitate to, or a certain price stock or something like that?
We like consumer discretionary quite a bit, especially right now. We do I'll tell you, the thing that we sort of stay away from is banking and oil. Like those are the sectors that are a little bit more difficult for us to work with intraday.
Mm-hmm.
But if we get consumer or consumer discretionary or software providers, pharmaceuticals, biotechs, all that stuff makes for real good intraday range.
Semiconductors.
Semiconductors, yeah.
Right. Something
Yep.
with a high beta.
Yep.
All right. Well, the next one, we had the CEO make some comments. I guess he's selling his homes and he's going to rent or something, I guess. This is Tesla.
Right.
And again, ran up to that 900 area a couple of times and has kind of backed off, but it's still somewhat hanging in there. What do you think?
I think, generally speaking, this is almost like it's almost like dealing with a geopolitical situation all the time, right? Where you're just waiting for the next tweet and waiting to see, who sort of throws something in the works. And, Elon Musk has been nothing if not consistent in, having something to say that'll send this thing sailing. Tesla is on our trading plan every day. So we have a Tesla set up. Well, actually, as far as the high liquidity names go, we've got Apple, Baba, Tesla, Netflix, and Nvidia that we watch every single trading day. Tesla tends to be a stock that we wait to see what this morning's trend is going to be. So we never trade it around the open, just because it's the spreads can be 70, 80 cents, and you don't want to get on the wrong side of that thing. But once it settles in, then what we start looking for is sort of an indication that it's getting hit by programs, right? That we can pick up where some program trading stuff is going on, and we'll just watch for these ranges to form. And really, what Tesla's been most reliable for us in terms of trading has been that when we see these high volume nodes that overlap with the price inflections, as well as these did today again, right, that we can just go long and short in these ranges and pick up really big moves on lower trade volume. We're not doing as much share wise as we would do on say Apple or Baba, but you can get into a Tesla position with a couple hundred shares and just wind up booking $6, $7, $10 pretty quickly on these swings, as long as you're patient and wait it out. Now, I've got a client who I can tell you has, over the course of a year, lost himself $2.5 million shorting Tesla. He's always trying to figure out where Tesla's going to fall off a cliff, and it just never does. So, I think longer term, I've got very little feel for where it's going to wind up, but intraday, it's I keep telling my guy, stop trying to do the longer term trade and stop trying to bet against it and just focus on.
Yeah, I mean, you had $40 worth of range here today, so I mean, it's not like there's not money to be made in the intraday. With the intraday trading, I've been around a while, so I've run into a lot of different approaches. One approach used to be don't trade for the first hour, and then see how the range establishes, and then look at it that way. Do you ever use like the first hour as a timeout and then see what's established, or is that not really in your program?
We're sort of stock specific as far as that goes. So for something like Tesla, I'll wait it out, and I want to see where's it going, or what's it what's about to happen with the stock in terms of where it's going to trade in the range for the day. I mean, we did a bunch of I've worked in fund projects over the years, and we would put together a fund, and our specific goal was we're going to participate in the open, we're going to participate in the close. Would have never done that with something like Tesla. Apple's a different story. Apple, we've got an opening trade in Apple every day of the week. Here's today. All right, so you can even see.
You found today's action fast and furious in the opening, because I had a number of stocks that I was going to get involved with from last night's close, but they opened up 6 to 10% higher, and then I said no sale, and it was so fast and furious on the opening. I just said forget it for the day.
A lot of what we're doing is taking, so like on something like Tesla, like I said, the problem is it's just not liquid enough on an open. and it's the bid-ask spreads are too wide. But on something like Apple, right, where like this chart shows the pre-market, and you can see how price is stabilizing going into the pre-market and then going into the cash session. So essentially what we're doing here, right, is I'm looking at order flow, and then this line represents where I saw order flow in the pre-market. The balloon over there, the brown, you can see the last pre-market bar there. We've got an order that goes live. The order is buy it at 294.85, sell it at 296.59, and that's just all based on sort of how we bracketed up volatility on this one. If you tried to do the same thing with Tesla, right, where I'm coming into an open and I see something like this, I don't have a clue, right, how to bracket this up prior to the opening bell. I need it to settle in. I need it to trade in a range. So that's for me, it's situational, and it's very stock specific as to whether we're going to do an opening trade in something, or whether we're going to do a wait and see kind of a thing.
Yeah, in this particular case on Tesla, it established a 20 or at least a 10 or 12 point range there that would be somewhat tradable. Is that what you're saying?
Right.
Yeah, as opposed to something that's just wild and woolly.
Yeah, and it's I mean, some things trade in the pre-market session. Apple gets a lot of ADF, alternative display facility trades, that are coming in real early in the morning, like 4:00 in the morning. And you start seeing some real liquidity before the open, and you get these very tradable ranges. And then other stocks, they're either swinging wildly in the pre-market, or there's just not enough liquidity to set up your volatility bands and figure out where the thing's going to go. So we're a little bit of both, I guess, is the long answer to your very short question.
Well, this next one is a biotech, and it's been very volatile here. $1.90 is the low for the year. $19 is the high for the year, and now it's at 10. So certainly not for the weak-hearted. But INO is the symbol, and it opened up in the 1130, went to 1160, and then it went home on the downside. So what's this one looking like?
Well, I think this was news driven, right? I mean, we had a lot of news on a lot of these biotechs.
Yeah. 21 million shares today. Somebody's playing it,
right? For us, a big determinant a lot of times is whether there's short sale availability on them, and some of these wind up not being available. But when I'm looking at this on a daily chart, to me, the ease of motion is going to be back down into the range, back down to about $9.60, and then below that probably into 8.5 down here into all this volume. You got a lot of, it looks like this is where a lot of the volume picked it up, and it looks like up here is where there was a fairly heavy push to get rid of the thing. It's interesting that this volume by price data over here, the way that Realtick does this is it sort of tabulates the importance of the volume that you're looking at. The algorithm goes through and figures out where these nodes belong in terms of the pressure points. And if you look up here, it's got this vacuum, and really indicated that this fall was going to be an easy one to have. And then in through here again, I see some downside. I just, $10, it's less attractive as a trader, but I've got to, if I had to tell you where I thought it was going, I'd say, somewhere down in this range again.
I got pretty good short interest of 14% there. So that adds credence to the idea that maybe some of the rally was people having a hard time locating stock or something like that.
Mm-hmm.
This next one I had a little experience with, Wells Fargo. I was thinking that it might be worthwhile to try to grab their dividend, because I think record date is on the 8th today. But after it looked like a dead duck around 27.50, I thought other pastures would be better to graze. And I think that was a good idea to get the heck out of that one.
Yeah. I mean, I'm kind of cold on banking in general. Just, in normal circumstances, they don't move enough for the kind of trading that we're doing. And in the in the current environment, I was much more inclined to sort of try to do a swing on these, but I was late to the party, so I didn't I didn't catch the big fall off. And at this point, I don't I'm just not interested in this range because I don't know what's going to happen with this debt going forward, of the default risk and all this stuff that these guys are exposed to, and I'm too worried about a surprise, in either direction.
Yeah. And, I don't know if they own commercial real estate loans or whatever, but,
Right.
those people are going to have a rough racket, maybe coming back to work and getting people in there and this and that. So there's a lot of unknowns out there, that's for sure. And it
Yep.
certainly doesn't seem to be springboarding off the lows like the rest of the market, that's for sure.
Right. Right.
We got a payment deal here, Square. And some people think this is a company with a big, bright future. It has doubled off of its 52-week low. But what are you thinking here on Square?
We've liked this one as an intraday trade. So we watch a lot of New York Stock Exchange open book data, and as you're watching sort of the liquidity quote on this one, it's been stable every time that it's given a sort of a buy setup for us. The problem has been there's just not been that many buy setups. So we do a lot of pattern trading. I've got about eight patterns that I'm looking for in the market, and this was generating some fairly good setups back here in January, and then in early February, get these range expansion setups, and then on the short side as well. But recently it's this sort of choppy trading that's been hard for for me anyways to read. I suspect it's probably going to get back up in here and retest this level, 7103 level. But what's that going to look like? I don't know. And if I don't get a nice ratio pullback or something that tells me I've got to buy from down in this volume and this real heavy trading range here, then it's probably not going to be on my radar.
With regard to a general question, on this particular stock, similar to the S&P, you had a very big drop in March and then a very big run up in April. And if you're a believer in the W formation, wouldn't this neighborhood around here be the neighborhood where the middle of the W would stop and you'd maybe start a downward move?
It could be. I mean, yeah, if you're looking, for sort of the technical style of trading that we're doing, I'd want to see it down under, these big volume nodes here.
Yeah. Then you'd have confirmation that your thought actually has reality to it.
Right.
Your concept is actually, you have proof of concept at that
Exactly.
All right, let's try CTX. It's CTXS.
Right.
And Citrix Systems.
I mean, this one's popped for us, a few times as an intraday trader for, long side moves. They haven't, a lot of times these expansions of range and volume, they really give us, great upside potential and move right into the next level of resistance. I mean, the problem here has been that when we look back on a chart, right, there's no real close by support and resistance to target for it. So, some of these trades have not worked out to the upside as well as we thought they were gonna. Early April, we had the 139.28 with a 140.88 target. So that was a good one. And then a lot of this stuff up in here, just didn't make the moves that we were expecting. So I've sort of laid back on this one and not, I've been looking too much at these things as they're forming here. But, right now, my favorite would be if it went up here and retested, this high and then left sort of a reversal bar here. And then I could just trade it back down into this range. After that, I mean, it's pretty extended, right? So
I would say so. I mean, something that was crashing in March and has made
Right.
all-time highs in April. That's a pretty pretty big turnaround, pretty big strength,
Right. Right.
And
And it just depends. I mean, it depends. All the software stuff, all the stuff that's in play, I just look at as, what's the world going to look like in 3 months, 6 months, 9 months, right? Um, and how much reliance is there going to be on all of the technology driven stuff? So,
And this has a 200-day moving average in the 111 area. So, but that 150 area, the air might be getting a little bit thin.
mm-hmm.
My big thing on the tech is that, business spending was down 10.5% in the last GDP report. And I don't think in Q2 that number may improve. And if the expenditure into 5G, cloud, cybersecurity, et cetera, is pulled back, I don't get the feeling that these stocks have any clue that that's going to happen. And I just think, business, and wasn't some people were saying business spending is already being pulled back in the last weeks of March.
I think it feels the whole thing feels to me emotionally driven, right? When I see the tech stocks taking off, I think a big part of it is that everybody thinks that the world really is going to change sort of permanently, and that we're going to have this heavy reliance on all this stuff, and that if this is the only way to get the economy rolling again, and this is the only way that the economy is going to stay rolling. I'm not sure, in my head anyways, that makes a whole lot of sense, right? I don't think there's some of these things, the valuations to me look like, well, like this one in particular would have to do something pretty spectacular going forward to justify being here.
Mm-hmm. Yeah. And again, a lot of it does have to do with the amount companies will be spending on these type of activities.
Sure.
And I thought the AWS number of only plus 33% was a little bit light, considering they're one of the leaders in cloud,
Right.
So anyway, one more, and then we'll get into some of the stuff that you're focused on, Paycom. And again, a buddy told me about iPay as well. We might as well look at that after we look at this iPay. Another one, where you're dealing with, not using paper money, right?
Right. So, Paycom for us, for sort of this, I wrote a couple books about the trading strategies that we use, and this today was a textbook entry and a textbook target. So, trading above this high, above this 249.15 high, was an indication that you were going to get a move up to 261.23. It stopped dead in its tracks, right at the volume node, right at the support and resistance line. The entry wound up being higher since it had a gap on the open. You wound up going in more like 255, 255.80, and then the travel range up in was pretty solid. I don't know from a the longer term vantage point if it's going to get it's looked to me for a long while like the value zone was sort of in here somewhere 261.23 up to 278.79. I talked to somebody yesterday who thought it was going to go to the moon, get back up into the 300s, but for me, I sort of see this thing giving us intraday trades and trading opportunities in this zone right here.
Yeah, the 50-day and 200-day are still inverted to the downside, 222 and 243. And the range this year has been around 160, 360. So you're right in the middle of the 52-week range pretty much. And you're still have inverted 50 days and 200 days, albeit the price is above both now, which is, not a terrible sign, but
right.
Still could be a confusing picture. Huh?
Yep.
Yeah. What about iPay real quick, if we could just take a look at that, because that was brought to my attention today, and it's in the same kind of concept, IPAY?
I mean, it's, to me, it's this to me indicates lots and lots of ease of motion to the downside, right? It's this big fall off here. Mm-hmm. It's just it's not the most, so this one for us makes a lot of gaps, makes it difficult to
rein in.
Yeah, to time these entries. So a lot of our trading relies on things not gapping so much that they're outside of our allowable slippage in the morning. So we've got a bunch of conditional orders and bracket orders and things set up ahead of time. And when they gap outside those parameters, then you get into the situation of, if it's going to come back in and give us a trade through, it's going to be in the wrong direction usually.
Mm-hmm.
You're catching a falling knife. So this one hasn't really been on our stock selection, I don't think, ever. And it's probably just because of all the gaps that have been going on in this.
It's pretty similar to being in the middle of their trading range of what they've been at,
Yep.
So pretty much the identical looking chart as PACE.
Right.
Okay, well, we're at halftime now. Adrian, why don't we, if you have a few different stocks you'd like to show and explain what your thinking process was behind your situation, that'd be a good time right now.
Well, again, so for instance, this morning, so we're we got a lot of earnings coming out. And, this is an example of how we parse earnings data. And, we go through with our traders, and, the ones that are highlighted in yellow are the trades that I'm taking or that I'm putting in front of them. And, we like to sort this stuff very logically. So this is just a scanner that we use on the site. And what this does, and you can do this manually, is first it goes and it looks for, is the stock gapping 2 standard deviations of volatility, where you would expect it to be in terms of volatility based on the price that it's opening at. So, this morning, UNM, XYL, and W were the ones that I selected.
Adrian, we're still seeing the iPay chart. Are you trying to share
hold on a second. How do I share the? Here we go.
Yeah, you might have to hit the share button again and switch screens.
Did that work?
Yeah. So
okay.
Yeah.
All right. So when we look at, so the first thing we'll do is sort of look to this the spreadsheet that populates for us in the morning. And as I said, it goes and it segregates things by S&P 500, S&P 400, long or short, right? So is it a gap to the downside or a gap that's higher? And everything that has an asterisk is earnings. And then everything that populates over into the far right column is also news. So, this column over here is sort of the darling, because it gives us the indication of, what's being watched, what's in the news, what's getting a lot of attention, what's the spread look like around the open, what's the opening volume look like. And as we see this stuff come together in the morning, it gives us then, a real high probability entry in terms of fading the gap back towards the mean. And it's not a matter of, fading it into the close of the prior session or trying to get a gap close. This is all about just a big statistical model that says we're out in the 95% confidence interval based on where the stock is trading, that we're going to get a mean reversion move. And, we further that with, we're actually watching then for, like in the case of Wayfair this morning, we're watching for sort of a 1, 2, 3 higher high or higher low in this case. So as the stock started moving higher, right, first bar, this would have been the entry, and we would have used like a fib expansion to time where we were going to exit the trade. Second bar, this is the entry. Third bar, we're looking to short below the low here. And then in this case, the strategy that we were using, with our guys was that we were targeting 170.12 based on this expansion ratio. And, that it did all this other stuff, we don't care, because the strategy is the strategy, and you follow your rules and you trade through. And most of the time, these things will make this reversion back down to about 1 standard deviation, and then they wind up, trading in the range over the course of the day. So that's a strategy that right now pulls to the front for us in earnings season. Earnings news tends to be an overreaction anytime that there's earnings news. These have not been very dominant in our trading at all for the last couple of months, because when the market gaps up 500, 600, 700 points in the morning, then it really takes a lot for a stock to put in a 2 standard deviation move. So you had data that was skewed, probability distributions that were out of whack with the model. But now for the last week or so, we're seeing that the data is normalizing again, and that we're getting these moves that are pretty predictable off the opens. We also had UNM and Xilinx this morning, so let's take a look at those. So same kind of a thing here. Now this would be to the long side, right? Problem with UNM was the $15 stock. So, your initial target on this is really just up into these highs. So when you get a 1553 entry and a 1567 target, it's not very attractive. So, we wound up passing on that one, just didn't pull back deep enough into the range. Whereas, this one, Xylem, right, this made for some steady trading, from an entry point up to a, right up to a profit objective. So we're always using something when you're targeting where you think price is going to go. You're always sort of basing it on where the big reversal was in the first bar of trading in a case like this, where you had a gap to the downside. Well, where did price get to before it reversed real hard? And our thinking here is that if we get there again, we're willing to exit based on the fact that we think this is where it's going to push lower again. Obviously, in this case, it went out, went out pretty steady, went out pretty flat over the course of the day. But most of the time, this is your profit objective. And then, like I said, a big intraday trade for us, discretionary trade, is always going to be Apple. And we do a lot of work on this before the open. We do a lot of work on this based on prior volatility. And really, what this boils down to is we're getting a good read on what's going on in the pre-market, where all these ADF prints are coming from, where's the sort of liquidity prior to the opening bell. And then we balance that going back, right, over the course of many days. And we put together sort of a volatility hierarchy that really goes through and tries to pinpoint, where are the programs hitting this thing? Because obviously it participates in a lot of program trades, a lot of market maker activity happens around support and resistance levels on this one. And then it gives us, right, fairly good indications going forward of where we're going to see these inflections. And when we balance that out against what's going on in the pre-market, we're able to give our traders sort of a heads up first thing in the morning of, okay, the first trade today is going to be the inflection off this 294.85 line. And, we're looking for a first exit up here at this overhead resistance line from a few days back. And that one worked out, exactly that way. And you guys can join us. You can look over our shoulder in the morning and sort of see. We work with about 40 of the guys who we've trained over the last couple of years, who work with us every day and trade with us every day. And that's our opening trade. And then, we were talking about it earlier. Then we shift gears, and later in the session, we'll start looking at Tesla. We also look at BABA. So BABA is a really good range trade for us. So you get an open, and then as the stock starts to settle in, we start looking for where is the volatility contained as the session starts rolling. And then what we're looking for as we move into the day is, Apple's the early trade. Then we move on to BABA, we move on to Tesla, and we're looking for these reactions down in these ranges to tell us, all right, these are the places programs are likely to hit. So a lot of times what we'll do, if this is a place that we're anticipating a short sale, then this is another place we'd anticipate a short sale. We're layering on portions of a position. We're short here, we're short some more here. Stop is up above this line. Usually, we don't do more than a couple layers of long or short on any of these trades. But this is just the plan of attack every day. Is we go through sort of the steady traders that we have, and they're set up the night before with 3 or 4 levels of bands. So Netflix came into the day today with real good pre-programmed levels. that gave us an indication of where we were going to go long on this one. So we had sort of a long bias coming into the session based on yesterday's range and yesterday's close and how the thing went out of the day and how it was coming into this morning. Yeah, so those are sort of the NASDAQ trades that we do. And then we do a bunch of stuff with the NYSE, right? So we put out we've got our trading plan that we do every day. In the case of NYSE, that's a totally different animal. So what we're doing here is we are looking for, so in this case, we had on target yesterday, we had an expansion move to the upside after this fib retracement. So this has been on our radar for a couple of days. Had this expansion move to the upside. And let me look at the trading plan here. We had a 112.13 entry with a 113.08 target and a 111.46 stop, right? So this is, again, a matter of you're building your trading idea based on this pattern that happened on the daily chart. And then, you're coming into today. And in that case, you're getting long up above here. And you've got a target up around 113.08, right? And you're just building this thing out over the course of the morning. You're letting it swing through. So this is sort of the NYSE version of what we do. So we got specific trades that we set up for NYSE, and we've got specific trades that we set up for NASDAQ. The NASDAQ, or in the case of BABA, which is just sort of trades like a NASDAQ stock, is more reliant on what's happening around the open, whereas the NYSE stuff is more reliant on, okay, here's the intraday sort of swing move that we're anticipating.
So you're doing both individual stocks and you're doing some indexes as well, or mostly individual stocks?
Mostly do it individual stocks. We do some spiders, diamonds, Qs, that kind of stuff, but we don't dive too deep into indices. So we don't do any futures or anything like that. Yeah.
All right. You want to hit a few more of these before we close it out and see if we can see? I think we already went over Carrier. Didn't you show that up there already?
I did. I picked that instead of Otis when you said it was the spinoff.
All right. Let's go find out what's going on up in Seattle with Boeing.
So this is an interesting one. All right. This is I see lots and lots of trouble ahead for these guys, but I think there's so many industries that are dependent on Boeing, and there's so much, obviously the commercial business is just pointing, we're going lower, but they have all that military stuff. It's like, 2/3 of military contracts are somehow looped back to something that Boeing does. But I really think this thing could wind up back down in the basement here.
Looks like Wells Fargo, meaning it didn't bounce that far, and it's right back towards the lows.
Yeah, and it just seems like every time that it gets pushed a little bit higher, they're just willing to sell this thing.
Well, the Fed made out pretty good. So, because rather than bailing out Boeing, they said they would back junk bonds, and ergo, if you can back junk bonds, then you could issue debt if you're in distress, and that's basically what's gone on. So, without spending any money, the Fed has kind of bailed out these firms by backing the high yield market, and that's Avis just sold a whole bunch of debt to get them through this period. So Boeing, I think, got $25 billion sold.
Right.
So,
yep.
So anyway, this is not one of your intraday favorites, although looks like it had some pretty good down days, huh?
It trades, it's we've got one of our traders, a guy named Bibbs. He hits this thing pretty hard every day. So he loves, trading the ranges in this thing because the ranges get so tight. Mm-hmm. Because you can get these really good inflection points on this thing where, it becomes very obvious from yesterday's trading activity, sort of where the inflections today are going to be, just because every move has like a real strong base to it. For me, I think it was sort of off my list for so long because of where it was trading and because of the way that the spreads were and everything on it, that I just haven't gravitated back to it again. But I probably should, just based on the way the chart looks. It's just got lots and lots of. They definitely always fall faster than they rise.
Right.
And this is a real good example stock that gave you a lot of opportunity over the course of the day here today.
This next sector, energy, has been a real winner for people who had the guts to jump in there while they were way down. Minus $37 a barrel is kind of tough to buy into, but whether it be Halliburton or Chevron here, CVX,
Yep.
Exxon Mobil, they all, Valero, they all had pretty good jumps. What are you thinking here on this one, though?
Well, again, I think that the react. Whoops, just change the symbol on it there. Hang on. There we go.
It seems like best of breed is like the JP Morgan of the sector. You know what I mean?
Yeah, we've got a couple guys who trade. So I don't personally like trading. Like I said, oils and banks has never been my specialty, and I think that this sort of the darling of at least the folks I know who are trading the sector, who are trading energies into this is integrated oil.
It's got the best balance sheet. I think that's why people like it.
Yeah. Whereas a lot of the other the big hubbub for a long while here over the past couple months has been if they don't back the junk bond market, then half of these bond funds were going to wind up in big trouble because all of these oil stocks, all the bonds were downgraded, right?
Mm-hmm. Right.
So you look at something like this, and it's got it's a strong company. It's got it's almost never in this kind of volatility situation, which is one of the reasons I don't really trade all that much oil. But, if you look at the history on the stock and the stability of the price ranges that it gets into, and then look at this climb, I mean, I think, it's probably going to get back up into 98.50 for a retest here.
At that point, it might be worthwhile looking at the sell sign.
I think so. Yep.
Yeah, because the 200-day average is about 108, and that's going to be coming down every day.
Right.
It's nice to have the direction of the 200-day at your back if you're doing trading.
Yeah, and I mean the volume on it's just been crazy. So it's I'm going to wait to see what the moves to the upside look like. So if you get a big expansion of range, expansion of volume move that pushes it higher, then you could wind up with a leg up to the 200. But if we start seeing sort of narrow range bars and volume in the top of the bar dying off, then like I said, that's one of my. I mean, we're both psychologists, right? My wife and I, and a big indicator for us has always been if something makes a big push to the upside, and the upside is where the top of the bar is where you see sort of the least volume. That's a good indication that somebody's not going to sleep well tonight, and they're looking to stop right back out of it in the morning. And that sort of herd mentality can give you some nice reversals on these things pretty quick.
Mm-hmm. This next one is Intuitive Surgical, and I don't know if they're dealing in elective surgeries, because I was looking at Boston Scientific and Stryker and Medtronics, because if they come back online, supposedly there's a future in the ones that do the elective surgeries, which have not been being done lately.
Right. I mean, this one's popped a couple times for us just because of the range bound trading that it's been doing. We had a couple opportunities back in late March to catch. Like I said, I've got the book that I wrote was I wrote it when I was in graduate school, and it was called a multivariate analysis of the United States equities markets, and that wound up being a no-go for my publisher. So the whole thing became Around the Horn, a trader's guide to consistently scoring in the markets, and it was a baseball analogy.
Mm-hmm.
All the same patterns, right? But just with a baseball metaphor surrounding it. And this kind of a move right here, we call that a line drive, and then this thing in here was a double header. So there was lots of tradable stuff that led to these really good moves on this when it broke out of these channels. But this is another one that tends to trade a little bit too high of a dollar volume for us to want to tie it up all day, because this would be one of these stocks that that winds up sort of on our intraday swing trading plan, and I don't really want the price on those to be above $150, $160 a share.
A 5% move could be, $25 against you very quickly.
Right. Exactly.
Mm-hmm. We don't need to chew up equity like that.
Right.
Okay, let's look at the last one here, which is Bud, B-U-D. And with all this shelter at home, they probably have been doing something, right?
You would have thought they'd be doing better than they are, but yeah, it's this has been on our list as a short sale candidate a few times. Always winds up gapping. Tends to gap a lot in the market anyway, since it's a depository receipt. I don't know. It's just not a darling on our list. I'm not really, as far as I like the consumer stocks. I'm not super crazy go nuts about the beverage.
How about if we threw up Constellation Brands, STZ, and see what somebody else in the sin business is doing?
So this one is actually a pretty frequent flyer for us, and it's because it puts in very reliable patterns, right? So a lot of the price-based patterns, so everything that, actually that book's out of print now, and probably won't be back in print for another year or so, but everything in there was based on market cycles and pattern cycles that happen in the market. And I like Constellation because it puts in a lot of those pattern-based moves. So, we didn't get many triggers lately, but so here from 168.18, nice pattern-based move down to 163.38, and then it looks like tonight actually this one is probably going to wind up back on our plan again with a potential short sale in the morning, 162.26, with a target down at 159.86. So we're probably going to be looking at this one for tomorrow, to see if we can pick up a little bit of this range back down into the support again.
Yeah, it opened at 164, went to 165 and changed. It closed at 163. So one might think that the momentum has rolled over a bit, huh?
Mm-hmm.
Yeah, so we'll have to see how that looks tomorrow. Well, we are, Adrian, coming to the top of the hour, so I did want to give you an opportunity to reintroduce yourself and your company, TradersInsight.com. And if you had any special offers or way for people to connect with you, this would be a great time to let everybody know.
Okay, so so our deal is really we're not looking to sell you something. We sort of let people decide if they want to work with us. If you would like to join us live, have a look over our shoulder while we're trading. So Julie and I are trading our account. We're working live on screen in the morning every day of the week. We've got 40 of the traders we've trained in there. We train 20 traders twice a year. So we're sort of a boutique sort of trading operation. But you can come and you can watch, see exactly what we do, see how we set these trades up. And all you have to do is text open. That's for like an open house to 310-299-9148. And that gives you just 30 days to watch what we're doing in the morning. You get a link that allows you access to us. And then if you don't understand something, if you're confused, don't stay confused. You can call and you can talk to Victor at that number down there, 310-584-6590. He's happy to help you navigate the site and sort of see what it is that we're doing. But like I said, as far as selling you something, that's not really what we're doing. People who decide to work with us, they sort of self-select and decide this is something that they want to do. And we're very active traders. So, if you're coming in and watching us, then, you bear in mind that most of what we're doing happens in the first hour of the trading day. And then tends to be the case that we sort of put things on autopilot and let them just sort of play out on their own as far as the rest of the trades go over the course of the day. So if you're a morning person, we're out here in California, so we are, 6 o'clock in the morning,
and at 'em.
oh, it's something else. Let me tell you.
But then you can have a nice lunch at around 1 o'clock. You know?
Yeah, no, it's great. And we live at the beach, and we're, I'm either once the first hour is over, I'm usually either hiking in the canyon or walking on the beach. So it's got its upside. The 5:30 a.m. wake up call is not one of them.
Mhm. Well, that's great, Adrian. I think everyone's very fortunate to hear your viewpoints on this. And obviously, this offer to get acquainted is more than fair. So I do hope everyone writes the number down, does the texting, and gets started with you. Again, for those of you who come regularly, I just want to remind you that I do have a weekly update that I email out to everybody at optionprofessor@gmail.com. So if you shoot an email over, I'll be able to put you in the queue, and you can get the insights of what I'm seeing in different markets weekly. But do make sure you do get a hold of Adrian and tradersinsight.com and take their free tour down there where you can look in on things. I think that's a very, very, very fair opportunity for everybody. Right now, I'm going to turn it back over to David. Thanks a lot, Adrian, and
All right,
we'll talk.
thank you.
We'll
My
talk
pleasure.
soon. Yep.
Thanks.
All right, thanks, guys. Great information today. So lots of good discussion and info. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get access to the archive of this show as soon as I can get it posted, as well as any of the past events. Also, just a quick reminder, if you haven't heard about this yet, be sure to mark your calendar for May 19th through 21st. We're putting together another big Synergy Traders event. And actually, Adrian will be back for that. Him and Julie are going to do the opening presentation on Tuesday, May 19th at 9 a.m. Eastern Time about the focus on psychology and stock trading for that one. So looking forward to that. And Jim will be doing a presentation on the 19th as well. So that'll be the Tuesday the 19th, a full day of 10 presentations on stock and options trading. And then Wednesday, May 20th, will be 10 presentations on Forex trading. And Thursday, May 21st, will be all about futures trading. And you can get access to that at TimingResearch.com/live. As with all Timing Research events, you can access it there. And I'll be putting out some more information about that, details about that soon. So be sure to watch your email for that. So just want to thank my guests again for today, Adrian Manz of TraderInsight.com. First time being here, so thank you again for being here, Adrian. And Jim at OptionProfessor.com. Thanks, everyone.
Thanks,
Thanks,
David.
David.